I'm Hans Lysklimt, and this is the Freedom Academy. All right, so gold just passed through $1,000. $1,000 for an ounce of gold. A lot of Ron Paul supporters are getting really excited about this and want to get themselves on this bandwagon and make money on gold. But I'm here today to say be careful. Be very careful. Gold has had a tremendous bull run, and that means a lot of gold bugs and contrarians like myself have made some money on their gold holdings. But that does not necessarily mean that the gold will continue to rise as it has. As a matter of fact, it might very well not continue to rise, and it might very well plunge. When you have had such a tremendous rise in a short while, the chances are very high that there's a risk of a downside and a plunge that could be very severe as well. Now, gold is not just gold. Gold is many different things, actually. Gold is gold, but you have different forms of gold that you hold for very specific purposes. I have to thank Gary North for clearing this out, because gold can be an investment, it can be a hedge, it can be a pure speculation, it can be so many things. Now, gold in its purest form, actual gold coins like this one, this is a 1 ounce dollar, 1 ounce $50 gold coin. One of these is now worth $1,000, and that's a sign that the dollar has fallen a lot in value since 2001. The price of gold has risen 3 times over, and it is clear that this has something to do with the decline of the dollar. But what you have to remember is that once this momentum gets going, and right now it's almost like a frenzy, then a lot of hot money is throwing themselves into this, buying gold because they've seen gold go so well. And I am of the firm belief that the market is going to crash. It hasn't really crashed yet, but we might see now, before the summer is over, maybe even before, we might see that the S&P might fall 10% in a day. That's when the crash is. I still believe that might happen, and I believe it will happen. And when that happens, all the hot money, all the investment banks and the hedge funds and everything that's thrown themselves into gold, they're going to have to sell. And they're going to be afraid. They're going to sell everything that has a bid price on it. So they're going to throw out all their gold just to hedge themselves and get into cash, because cash is king. So when the S&P falls by 10% in a day, I would not be surprised to see the gold fall 10%, maybe more, maybe 20%. So gold could very well fall down to $700 or $600 again before we see it go to 2,000 or 3,000. I believe that we will see 2,000 or 3,000 in our lifetime, but it's going to be a very bumpy ride until that. And the Fed has not totally lost control yet. And I believe that one of the things they will do is that they will try to keep up their promise of a low inflation. And when they do, they might need to actually deflate some of the economy. And that means less money out there. And that might hurt gold very much. From 1980, the gold fell tremendously from the last peak that we had last time, and this might very well happen again. So be careful about this. I want you to buy gold, but buy physical gold like this one to keep safe, somewhere safe in a case of a total disaster. If you are speculating in gold and gold mining shares or in paper-based gold, I want you to be careful. I actually want you to divest and to sell some of it, to take some profits, because when the market falls, gold is going to fall with it. You're watching the Freedom Academy. I'm Hans Lysklimt.